All right, welcome back to the Jason Gray Show. Let's go ahead and talk about the Federal Reserve and what they did today. So they increased the short-term interest rates by 0.25%, and Jerome Powell had a pretty good conference call. And what did that do to the market? So the market sold off a little bit. You see it in the stock market, but mortgage-backed security money got better through the day. And I have to explain this almost every time to my clients that the short-term interest rates that the Federal Reserve controls, this 0.25% rate increase, a lot of times has a better long-term effect on 30-year mortgage rates. And in doing so, their outlook and their projection of rates going forward, I think they're only going to do one more rate increase they're talking about, which is probably only another quarter. Then it sounds like they're going to pause. Now, a lot of people are anticipating at the end of 2023 that they're going to have to lower the short-term interest rates and have to pivot because these lagging indicators that the Federal Reserve is looking at is going to catch up to himself. And we're talking about like the housing expenses, the CPI reports, the PPI reports, wage prices, all that stuff should be cooling down, and we're slowly but surely seeing that in some of these reports. So I'm still holding to my crystal ball thing here of saying by the end of second quarter, beginning of third quarter of 2023, mortgage rates should be improving dramatically. It's going to be choppy for the next 50 days. I know that for sure, so be careful and be cautious. Lock in loans if you have an opportunity to lock in the rate. Don't float the rates rolling in. And we will see what happens here starting June, July, August, September. We'll really get a really good idea what's going to happen, but I feel really comfortable with it. All the information that he had during the conference call went perfect. He contained the banking crisis issues. He was saying that pretty much everyone's deposits are safe. Don't worry about it. He explained that they are going to be incredibly transparent with the SVP, the Silicon Valley Bank debacle that happened. And he was open when one of the reporters asked him a question, would you be okay with a third party investigating into what happened with Silicon Valley Bank? And he said, yes. He goes, we're super transparent. We're going to have a separate group of people that are going to audit this piece, try to figure out what happened, what failed, and what do they have to do in the future of protecting the banking system itself. But he says that the situations going on with Silicon Valley Bank was unique and wasn't hedged properly. And since they didn't hedge it properly, that's why they failed. There was some comments about Credit Suisse as well and how that was taken out by UBS as well. That was great. Pretty much he did a really good job at the conference. So mortgage rates, I think, are going to be choppy for the next 50 days. Mortgage rates should be improving. Don't worry about what the short-term interest rates happens with the Feds. That stuff will change here soon, and they'll pivot. Hope you like this video. Like and subscribe, and I'll talk to you soon. Bye-bye.